All right, good afternoon. Welcome back here to Trader Minute. Great to have you aboard. Market about 90 minutes until the close here today. It's been a pretty kind of just ho-hum type day in the market. I don't think there's any other way to describe it. It's a day where we're not seeing major change. Stocks that have been in upward trends are generally moving up a little bit. Stocks in downward trends, maybe not moving up to the same degree. And it's one where, can you argue whether the market is up or down today? Yeah, absolutely. Right? I mean, we can just go to the S&P 500 and it's up, right? It's up 0.3%. Market's up today. Dow Jones Industrial Average, it's up today 0.3%. Great. Market's bullish. Market's running and off it goes. Then you go look at small caps and they're down 0.7%. And it's not a bearish pullback on small caps in any way, but it is one where we do see small caps lagging quite a bit, and there's a good reason for that. You take a look at transports today. Transports are really pulling back here today. This is one of the areas that could be most negatively impacted if there's if there are tariffs between the U.S. and Mexico. But anyway. We see those pulling back, but we also see the KRE, which are the regional banks, right? Transports, regional banks, those are two big areas in small caps. And then the third big area is biotech, and we see biotech pulling on back here today. So, three of the big areas that drive small caps are all down, and so we do see small caps, lagging here today to a, fairly significant degree. It's not enough to change the market vibe, but definitely enough to kind of garner some attention and to make one look at the market and go, hey, you know what? Maybe things aren't as peachy and rosy as the overall week might suggest that it is. But it's one where we're just not seeing a lot of major change. And let's face it, tomorrow we can see small caps up 1.5%, and large caps, they're up 0.5%. And we're not really looking too closely at it. As we go into tomorrow, two big things. We have U.S. Mexico talks. We're going to hear news on that today, and I kind of expect that it's just going to be one of those. Hey, things are still ongoing. We don't have a deal. Things are ongoing. We're going to continue to work on it. That's I think that's what anyone really kind of has to expect. And I do believe there are buyers out there waiting for the event, waiting to hear, oh, no deal was made, but we're still working on it, to step in and buy that dip. And, I would not be surprised if that dip is bought. But again, it depends on how that all plays out. And then we have the jobs report tomorrow. And I was asked today whether or not I would expect the market to go up or down based on the jobs report, because we saw the ADP report on Wednesday and it showed a weakness, right? It showed a significant drop in new jobs. And, okay, so we go into tomorrow, we have the government number. What if that comes out really bad, like we saw on the ADP number? Well, is that bullish or bearish? Does that mean the market's going to go up or down? Well, good luck with that, right? Because here's the catch-22 that it's in. Negative jobs report number means the Fed is more likely to cut rates sooner than later, which is what the market bulls want to see. And so a negative jobs number for 1 month is actually going to drive a policy change that, the bulls argue it needs to happen. The bears are going to say, look, just 6 weeks ago, you were talking about this grandiose economy and all this, great grand economic stuff. And now we're talking about rate cuts. And both sides have an argument. But, it's one where we could see a really strong jobs number and the market actually go down. Right? Because the bulls are going to have to go, oh, wait, is the Fed going to hold off? Are they going to wait on, on lowering rates? What does that mean? On, bottom line, what do we see on Jobs Friday? We tend to see reversals, meaning if, there's a gap down, well, market tends to rally higher. If there's a gap up, market tends to reverse lower, and I wouldn't be surprised to see those scenarios come in here tomorrow. All right. Okay, so let's go take a look at the challenge. We're right here at that time. No new signal here today. We didn't see one this morning, and we don't have one this afternoon. We have some crossovers, but they are not, they're not turning into signals. So we've had one signal in the last 2 days here. So not a heck of a whole lot there with that, but we are in 3 positions that we have to go out and take a look at here. None of them, last I looked, let's go check here. Yeah, none of the positions. Disney's at 136.77, so it's not at its profit level. Still needs a little bit to go. Visa needs a lot of bit to go to get to its profit level, and Under Armour, it still needs about 60 cents to get to its profit level. So none of them are at their profit level. None of them are at their time stop level. And so no change, no real change to make here. Let's go fill in the prices here. Under Armour, the option's $355. So let's tag that here, $355. Let's go to Disney. And Disney, the option is $452, so we'll just go $450 here. And a Visa, the option is, and again, these will change before the close, but $425 there on Visa. And so that takes the challenge, $23 shy of $8,000. Okay, so just pennies short of $8,000 here. So it's been we got off to kind of a little bit of a sluggish start with Procter & Gamble, JD, J&J. In fact, in the middle of the J&J trade, the challenge was at 3,000. And so with GLD, with 1 day of J&J, GLD, Under Armour, and Disney, and Visa, which are all still going, we've managed to see the challenge move from 3,000 to 8,000 here, which is definitely a welcome move, and I will definitely take it. We are dealing with a market that since the start of the challenge, if we just come and look at the S&P 500, since the start of the challenge on May 9th, the market is, it's had one little rip, one little dip, one little rip, and the rest has been, some heavy chop. And the rip and dip, right? The dip was about 4 days. The rip was been 3 days. We haven't exactly been stacking on a big trend here, with the way the market has gone. So just glad to see the challenge, surviving the chop, surviving the kind of turbulence that's out there. We grabbed just a small trend in a few stocks, and we can see how explosive that it can be here. Okay, so no changes. No changes. Going to run with what we have into the close. Again, if you want to make a change to a position, feel free. Don't let me stop you. It's just one of those where I'm not going to sell you on the position or anything else or explain the position. Kind of what the entry criteria is. You know how it runs. You know how it works. We've gone through all of that. And if you have any questions on that, you could just come to some of the videos here that are on the spreadsheet and access those. And it'll discuss everything, everything in detail there. But, it's not something where I can look and go, I'm a little worried maybe the market pulls back. Should I lighten up on some exposure? That just doesn't even come into play anymore. Right, it just doesn't come into play anymore as we're running here with the algorithm and with with the signals that we get from the algorithm. And ultimately, we may get a little pullback, may need to cash out some trades, but we could also see some further rally here and see those trades perform very, very well, and that's what I'm looking for, and that's what hopefully we see as we go forward this week. I went through the market today just kind of going, all right, is there anything interesting going on that, I could talk about on video and say, hey, this is interesting or that is interesting or here's a setup or there's a setup. And, I just went through things and it's just very dry, very kind of blah in terms of a lot of the setups. Sure, there's always investment stuff that can be talked about and things like that, but even on that front, we're not talking about things changing, right? We did see some comments out of Triple M today where I started to look at them and I go, okay, you know what, it was a disastrous earnings report. We talked about it when it happened, that the stock's going to need a big reset at a much lower price. We have seen the stock just absolutely get crushed. In fact, on the day Triple M reported, we talked about getting short Triple M and long Honeywell and playing for the performance of the stocks to diverge, where Honeywell would do very well and Triple M would do very poorly. And whether or not the market went up or down, you didn't care, right? You just wanted Triple M to lag Honeywell. And we've seen a huge lag on Triple M relative to Honeywell. I think it's time to take that trade off. I think it's time to move on from that idea and from that trade. Why? Because I think the worst is behind Triple M. I think it's had that reset now. It's happened very quickly, for something like this. But I'm not convinced that Triple M doesn't go lower. In fact, it very easily could go lower. But its performance relative to Honeywell going forward, we can't look at the fundamentals and say they diverge, dramatically today like we did after the earnings report, simply because the price of the stock has collapsed to a point that starts bringing some valuations into play that are interesting and compelling. And, if you start to hear more known than unknown when it comes to Triple M, we can see investors start to, step back in. I don't think we're going to see them, fly into it or anything like that. Kind of like a FedEx story. Yeah, we'll have bounce days and things like that, but this isn't going to be something where investors just jump in and say, hey, it's all clear, let's go. It's just not going to happen. It's going to need a couple earnings reports. It's going to need a few news cycles to kind of go through to get anything real positive there. But the performance of Triple M relative to Honeywell, I think it's time to kind of pull that off to say, okay, you know what, Honeywell, yep, it's been pretty flat during that time period, right? But Triple M has fallen off a cliff. It's fallen well over 10%. And on any kind of combo trade, 10% in a month, that's a phenomenal return, and we kind of see that has played out very nicely. But as I kind of look and I go, okay, is there another way to kind of play some of that? I don't think there is. I don't think it's something where you go, well, let's long Triple M and short Honeywell for that spread to kind of come back. I don't think that's a play here. I think that's a very high risk, low reward play there with it. I do think there's kind of an interesting action here with something like a Pepsi, something like a McDonald's, where these stocks, these more conservative stocks, hitting new highs, where they can be played, and you short the market, long these stocks, and play for these stocks to outperform. But again, it's not one that I'm super sold on. So decided not to kind of show all the numbers when it comes down to it, as I don't think they're compelling enough to go and do that. But some beautiful charts on Visa, on Pepsi, on McDonald's. I was kind of disappointed Pepsi didn't trigger. This is one that could have triggered for the challenge. It's on the challenge watch list. Had the 3-7 crossover, but didn't get the trigger on it. But it's definitely had a very nice move here. As it has gone forward the last couple days. We didn't get a trigger on Walmart either. And, Walmart's had a very nice breakout above, kind of this level that it's been bumped up against for a long time. when we look longer term, this is one where we could be talking about Walmart sitting in the 120 to 140 area, just based on the technical pattern that we see here. 120, a little more conservative type of a price target. I think a little more realistic type of a price target. But, this is an absolutely beautiful breakout, of a very traditional chart pattern, a very bullish volume flows, very solid fundamentals. If you look here at the weekly chart, on the daily, I was just kind of showing this kind of triangle action. But if we look on the weekly chart and go back to 2018, right, this is something that has a just kind of perfect cup and handle type of pattern. The handle dipped a little bit more than a handle will normally dip on a cup and handle. But outside of that, this is a 18-month cup and handle pattern that is seeing a breakout here to it. One of the reasons I say 140 is just, because of the depth of, of the cup here. And this has been a company that, hey, they went and reset back here in 2015, right? They came out, they gapped on down. It was a disaster. This is going to be terrible. And, we talked about it on that day. Hey, this is a reset. Okay, the bottom's in. It might futz around the bottom for a little bit, but this is a long-term bottom. Why? Because they have totally stripped out expectations, and the only thing they can do from now on is beat. And we have seen them continue to beat, continue to grow, continue to have fantastic numbers, and they're nowhere close to needing a reset right now. They are, really kind of running on all cylinders and doing quite well. So very, very strong chart pattern here when it comes to Walmart. Strong chart patterns with things like a Pepsi and a McDonald's. There, me, I'm very leery of McDonald's long term, but McDonald's continues to be the biggest buyer of their stock, and they haven't stopped buying. They continue to buy. They continue to get more debt to go out and buy, and you can say, hey, that makes a lot of sense given how cheap debt is, and you have some good reason there. But they have not stopped buying, and we just continue to see, the stock fly higher, and continue to kind of push into new highs, even though many stocks in the market are far from hitting those new highs. Thanks for hopping on. Have yourselves a fantastic evening, and I'll be back on here with you tomorrow morning, and we'll talk to you then. Take care.